The last time the NASDAQ closed where it closed today to close at 2314 was, you can probably guess.
No, it was March of 2000.
Second week of March 2000. You and I may have been together that week. Back then you were at Montgomery Securities. You were, what was it called, Bank of America Capital Securities?
Bank of America,
then.
right.
And the IPO market was very different than it is today. How do you, first of all, assess the difference between the two?
Well, I think they're actually dramatically different. People look at the activity this year, which is the most active IPO year since 2000, and say, well, it must be a bubble again. But the difference is, even with 275 IPOs, the companies coming public are much more mature, larger, and you're not seeing the kind of garbage that you saw in the when things were really going crazy.
Yeah, there was some crazy stuff back then. There's some crazy stuff this year too. But the size of the deals, the big deals, are much bigger this time.
Well, what you see, and during the decade of the 90s, the median market cap of a company going public was 130 million. It's about 1.1 billion, so it's almost a tenfold increase in the past dozen years.
This is the market cap of the companies, but not the size of the deals themselves. The deals are also bigger too.
Yeah, about the proportional. So I think the average deal is roughly 225 million. So that's 30 million was the average deal during those days. So things have changed pretty significantly. And also the time from VC investment in 2000 was 3.1 years. Last year it was just about 14 years.
So 14 years before a company does a deal?
On average.
So let's talk about the kind of candidates that you expect, and please let me know which ones you've got holdings in, because your business is very interesting, where you take private stakes and then sell stock in your company, which holds those stakes. Who do you see likely to do IPOs this year?
Well, I think there's a number of companies that could go public if they so chose. I mean, there's 50 private companies with $1 billion or greater market value. So just to contrast that real quickly to 2000, there was 10 in 2000.
Really?
Yeah, so it's a five-fold increase in that period of time. I mean, companies are certainly at the top of the list. Uber's got, it's got to be the #1 pick for going public. $40 billion valuation in the last round. They've raised $3.3 billion privately, which is just as a mind-numbing kind of statistic. So that's certainly the top of the list. I think other companies that are likely to go public, Spotify, which is a company that we have an investment in. And if I knew they were going public, I couldn't say it. But I think it's just their size. And they're in Europe. They have to disclose. They're over $1 billion revenue company today, growing very fast.
Right. Not trailing.
Yeah, trailing.
Oh, trailing. Yeah. Really? So they're that big already. So in the run rate, then it would suggest that they're going to be almost 30-40% bigger.
They're a very significant company, growing really fast with a very addictive service. High recurring revenue.
I'm a user. You're an owner. I'm a user.
Dropbox is another company that we have a position in that certainly could go public if they so chose. I think a lot of people thought they'd go public in 2014, but the company is growing very, very well. We've got very loyal. I call it.
So given their ability to stay private, Uber just raised $1 billion at a crazy valuation that once we can see their books, we can raise more questions about, but we can't right now. And all the abuse Uber's, let me phrase it. All of the criticism that Uber has justly received this year they might have had to deal differently with those things if they were public. Why go public at all right now?
Well, that's probably the greatest reason for them not to go public, because obviously they've made a number of missteps from a perception standpoint. I mean, and different things that they've done that have gotten a lot of scrutiny. I mean, the success draws a lot of attention, obviously, but they've brought a lot of that attention on themselves in terms of just kind of things that weren't so smart that they did.
So maybe that's the reason they stay private.
Yeah, being public is just going to increase that more, and so they'll have to be ready for that. But that still, you just look, it shows all the signs of a company that's getting ready to go out.
What are the wild cards out there?
I think some wild cards. One would certainly be Lyft, Uber's competitor, right? I mean, it's smaller business. By the way, we're an investor in Lyft, so but smaller business, but growing incredibly fast. And with Uber, if Uber goes out, I think that puts Lyft in a situation where it might consider going public faster. So that's certainly a wild card. A second, which is a company that few people talk about, is SpaceX. It's an Elon Musk business.
Yeah. So he's got experience with the capital markets. He knows that he needs a lot of money to run that business because the money it's not cash flowing in any real way.
Right. And so because of his track record with Tesla and Solar City. I think the public market would say, give me the next one. And so for all the reasons you just said, that's sort of a wild card that I don't think people are necessarily expecting, but I think could go public.
Could be an explosive IPO.
There you go.
Let's hope not, for the sake of the rockets and the people around it.